Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And as every weekend, I want to give you my weekly update on my real money North American portfolio for the week 11 of 2021. And nothing really happened last week. There was no transactions at all. I also didn't receive any dividends, so really no movement in my positions. And so the pie of my portfolio still looks like that. Intel's still the largest position, followed by Bank of Nova Scotia, Berkshire, American Express, and so on. And I have a position of cash of 21%. I would like to purchase that and lower it to around 15%, 15 to 18%, but it's difficult because still the market is way overvalued, so it's difficult to find good investments. To just have an overview over all the companies I researched and also about the companies I have in my portfolio and to know when it's time to buy, I have a watch list and I also have a list of the companies of my portfolio and see how far they are from the intrinsic value. And first of all, here's a view on my watch list with all the companies I have there on this watch list, the current price, the intrinsic value, and the distance to the intrinsic value. And as we can see, a lot of these companies are over the intrinsic value, sometimes even way over the intrinsic value, but some are on fair value or even under the intrinsic value. And especially the last four here, Lennar, Service, Kroger, and Alibaba, really interesting. Alibaba a little bit special because I still fear a little bit to invest in a China company, but the price seems really cheap right now. And of course, as with all the positions in my portfolio, also for the companies here on my watch list, you find deeper analysis for all of them on my channel. Check this out. Then the same idea with the positions in my portfolio, and here we see that also a lot of these companies are overvalued, but also some are undervalued. And of course, with the overvalued ones, I have to see when it's maybe also time to sell, because when the price is too much over the intrinsic value, then at some point it's time to sell. But here, Disney is over 27% over my calculated intrinsic value. This is not the time to sell. I would say this is not exuberant. It's over, but not as much as I wanted to sell. If we come maybe to regions of 50 or more percent over the intrinsic value, then I have to think about. And on the other side, we have some companies under the intrinsic value, and as I told you also in other videos, I will add more and more over time of Berkshire, because Berkshire is just the best long-term investment, at least if you are happy for your basic investment with a return of, let's say, 8 to 10%. Also Intel, EA, still very interesting. Also my newer positions, Progressive and Stamps, are interesting. Maybe I will add there a little bit over time too. And so with that, I have an overview over my positions, over my watch list. And then when there is a time and when things go way under the intrinsic value, then I'm on the move to purchase and add to my positions or even buy new positions. And with that, let's take a look at the weekly performance of my portfolio positions, and the big winner this week is Facebook with 8% performance over the last week, followed by Stamps and Pfizer. And on the downside, we have Imperial Oil. After the big run in the oil, Imperial just came back a little bit, 7%. Nothing wrong with that, all fine. I will just stick with it like with all the other companies. And when we look at the overall performance since the start of this portfolio at the 2nd of December 2019, then we see the top performer is Caterpillar with 102% performance, followed by Walt Disney with 89, Leggett & Platt with 68, and so on. And the only two positions in the minus is my newest position, Progressive, with 0.16% minus, and Jack Henry with 0.79%. And if you're new to my channel, you find deeper analyses to all of these companies on my channel. So check this out. There I analyze the financial numbers, calculate the intrinsic value, and tell you when and why I bought. And with this portfolio, I made a overall performance since the start of 58%, which is an outperformance to the S&P 500 of almost 33%. And that's great, even more if there's this a portfolio of very boring, stable, profitable businesses, no hype, no bullshit, just long-term value investment. And if you like the whole idea, then just like the video, share it, and subscribe. And then we will see the next time with another analysis of an interesting stock and a high value stock, because this is what you find here. So see you then. Take care. Bye bye.